I'm Emily Cheng in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, U.S. stocks climb on strong economic data. This ahead of the next batch of big tech earnings next week, including Tesla, Apple, Facebook, Twitter, and Amazon. We'll get you up to speed. Plus, hyper-local media CEO Byron Allen is innovating in streaming with not one but two new platforms, betting big on local news. He'll join me to talk about that and more. And it is the final day in the week-long series of the founding and phenomenon of TikTok. The platform says it's committed to diversity, but some Black creators beg to differ. We will talk about it all with influencer Landon Moss. All those stories in a moment, but first, the markets. Our Kriti Gupta and Ed Ludlow are watching how the week ended. Kriti, let's start with you.
Well, Emily, a choppy week for tech. You can just see it on a 5-day chart of the NASDAQ 100. Look at this, really whipsawing, but ultimately ending in the red, down 0.7%. And I really want to flip up the boards really quickly and show you the ETF impact, because over these 5 days, you saw a lot of positioning ahead of tech earnings next week. And this was actually the biggest outflow out of this ETF, going all the way back to 2000, of course, on a 5-day time frame. This also is going to be ahead of a slew, like I said, tech earnings, but even further than tech earnings. Flip up the boards one more time, and I want to show you that we have $18 trillion worth of companies really reporting this week. So it's not just tech. There's going to be a lot of volatility in the week coming up. Ed, what are you watching?
Yeah, let's get straight to Intel. Down 5%, biggest drop in 3 months as data center revenue fell 20%. Crimping margins. Flip up the boards and let's take a look at the story of the week with this stock. Down 9%, its biggest weekly decline since October. Investors clearly worried about that data center business, although fighting talk from Intel CEO Pat Gelsinger, who you will hear from later on the show. I want to get to Japan. Panasonic, you know Panasonic, the household electronics name. Those shares down 3.5% in Japan trading on Friday. It's buying an AI company called Blue Yonder. This is a company that uses artificial intelligence to predict how much a product will be in demand. A useful tool to have, but investors were concerned about the $7 billion price tag that Panasonic is willing to pay for that company, and it already had a stake in the company. Final board that I want to look at, some of the big names moving in the tech space on Friday. You can see Apple up 2%, a story out. According to sources, they're going to give vaccines to employees in partnership with Walgreens. And lastly, you see a lot of social media stocks on the move. Google at record highs after analysts kind of stepped back and became less worried about the update to iOS from Apple and the new privacy and ad tracking measures that are coming with the ad update. More sanguine tone from the street on that ahead of that release next week. Emily.
All right, Ed, Kriti, thank you. Happy Friday. All right, the White House wrapped up its climate summit of global leaders with President Biden expressing interest in a border adjustment tax, which would slap a levy on imports from countries with weaker climate policies. Bloomberg's David Weston spoke to John Kerry, U.S. Special Presidential Envoy for Climate, earlier about what could be a cataclysmic situation if countries and companies don't step up.
We had folks who are CEOs of companies and folks who are involved in labor, all together supporting the notion that there are an unbelievable number of jobs to be created in this transition. I mean, look at the transition right now to electric vehicles. The highest valued automobile company in the world, I think still, is Tesla. Makes one product, electric vehicles. It is the future. People are betting on that. They understand that. And I see all the other companies are beginning to chase it. Mercedes, Volkswagen, Ford, GM. GM has announced that by 2035, they're not going to make any other car other than an electric car. That is the future. And I think the countries that get there first, you know how market share works. You grab that early market share, you've got something that could last you, if you're smart, for a long time. And I think the president wants to make sure that America is grabbing its share of the new technologies, of the innovation, and of this future. It's not unlike other transitions we've been through. Go back to the 1990s when we had the computer technology come online and we had portable telephones, and it was a big market and a lot of people got rich. This is 6, 7 times the size of that market. And it's going to fuel remarkable increase in different products and in work that needs to be done to make this transition. The building of an American grid, laying the transmission lines, that's work for all kinds of different disciplines within our economy. And I think the money is the reason the banks and asset managers are pledging to net zero is because they know this is an area where the demand is going to be there, and they believe they're going to be able to invest and make money.
Mr. Secretary, you've been in the forefront not just of enlisting the help of governments, but also, as you've referred to already, the private sector and what needs to be done. Are there things, though, that the government can do to encourage the private sector? And I'll mention things like a carbon price. Should we adopt that? A carbon tax or a border adjustment tax? Should we be taking action like that that will really harness the power of the private sector and let the markets work and do some of the work for you?
Well, there are a lot of advocates in the United States Congress for pricing carbon in different ways. There are different thoughts about how to do it. President Biden, I know, is particularly interested in evaluating the border adjustment mechanism. He wants to look at that and see whether that's something that we need to deploy. Europe is already looking at that in depth and may well wind up deploying it if they don't get satisfaction from China and other countries with respect to the transition off of coal and their effort to try to do their part in reducing emissions. And there is in the negotiations on climate, David, a concept called common but differentiated responsibility, because the more developed countries were ahead of everybody else and the developing nations needed a certain room to be able to move. There was this notion that, well, there's a common responsibility to deal with climate, but a differentiated response. That is increasingly, I think, disappearing in a sense that the new technologies allow those other countries to leapfrog and to go directly to some of this new technology and deploy it. But they need finance and help to be able to do that.
All right. John Kerry there with our David Weston, U.S. Special Presidential Envoy for Climate Change. All right, coming up, we're going to be talking to Byron Allen, media mogul, about the future of post-pandemic streaming and lingering concerns about diversity in Hollywood ahead of the Oscars. Byron Allen joins us next. This is Bloomberg. The pandemic was fuel to the fire for streaming. Companies like Netflix, Disney, Paramount, just some of the big winners over the last year. However, as vaccines roll out and days get warmer, will as many viewers be staying in with their popcorn? Netflix results this week showed weak subscriber growth, the stock plummeting as investors question the post-pandemic future of streaming. On the other hand, AT&T rose the most since October on the back of strong growth with Warner Media's HBO Max. I spoke with Warner Media CEO Jason Kilar, who hinted the size of the streaming market could be in the billions.
I think that the ceiling on OTT is much higher than most people are talking about today. If you look at the number of people that are on the planet and the fact that everyone loves to be moved through story, I think the ceiling's a lot more than several 100 million paying subscribers, which is what most people are talking about when it comes to over-the-top services. So we're playing for the long game and for a ceiling that's much, much higher than that.
I want to bring in founder, chairman, and CEO of Allen Media Group, Byron Allen, who's also looking forward to that ceiling rising in the streaming space. Byron, we're going to talk about your bets in a moment, but when you think about the market overall, Jason Kilar hinted to it there. Do you think we could get to 1 billion subscribers or more?
Oh, I think we're easily chasing about 4 billion connected devices around the world. We're looking at it from a global basis. And when you think about the number of folks who have connected devices, it's much bigger than 1 billion. I mean, we will get past 1 billion without breaking sweat.
But you're not at all concerned about Netflix's latest results? I mean, what does that tell you? subscriber growth just wasn't what people thought it would be.
Well, they still did very well. It may not be what they thought it would be, but I think anybody would take close to 4 million news subscribers per quarter any day of the week. They're a behemoth and they're going to continue to grow. We're in our infancy here. 100 years ago, it was the Industrial Revolution. And what fueled that was gas and oil. Today, 100 years later, it's the digital revolution. And what's fueling that is content, content, content. Content is the new oil. And we can't produce it fast enough, and we can't put it on the devices fast enough. The appetite is insatiable for content. And it's growing at a rate that people have never seen anything grow at. So we are firm believers in AVOD, advertising video on demand. I do believe subscription video on demand is challenging because you do have Disney in the space, Amazon, Hulu, Netflix, on and on. That's why we're firm believers in everybody's favorite word: free, free, and more free.
So you've got two ad-supported platforms, and the newest one called Local Now, which is focused on local news, offers more than 300 channels. Local news, and sadly, has been dying a slow death. I think we've all realized the gap that has been left in the middle of this pandemic, wanting to know what's going on in our communities. But what makes you think that, especially as we go back to normal, that people are going to want another streaming network and focused on local news?
Listen, I think it's a great question. Real simple. When I bought the Weather Channel a little over 3 years ago, I got a gift from the digital gods. They said to me in the new owner's presentation at the end of the day, and a kind of just a throwaway, they said, oh, by the way, you own something that's the equivalent of a fully distributed broadcast network that uses proprietary software, artificial intelligence to aggregate, produce, and curate from multiple sources, local news, weather, sports, and traffic, geofence to the end user's zip code. And I said, wow, that's genius. They said, yeah, you're probably going to want to shut it down because it's losing over 25 million a year. And I said, absolutely not. There's no way I'm going to shut it down. So I said, but I'm going to reposition the asset. So over the last 3 years, I put it in beta, and I've invested personally over 100 million of my capital to reposition it. They were trying to do it as SVOD, get people to pay $4.99 a month. I think that's challenging. I said, I'm going to make it AVOD, advertising video on demand. I'm going to add free movies, TV shows, documentaries, and I'm going to provide local news because super hyper local information is essential. It's absolutely essential. People want to know what's going on with COVID-19, but more importantly, they want to know what's going on with COVID-19 in their zip code. And we're watching everything digitized.
They also want to know what's going on with the weather, and that is your other streaming platform, which is Pattern, sort of a sister platform to the Weather Channel. I mean, as an example, how much engagement are you seeing? How many viewers how many viewers are there?
Well, listen, on Local Now, it's been in beta for a little over 3 years, but without any promotion, we achieved 5.8 million monthly active users. I'm now about to spend an enormous amount of capital to promote Local Now because we're on all the platforms and people can download it in less than 15 seconds and authenticate it from their zip code. But there's one thing you will always need. It's clearly very essential. You're going to need local news and information. As far as Pattern is a platform that is really focused on climate change, global warming, and what we have to do as human citizens to stop climate change and get people to understand what that means. There's so many things that people aren't connecting the dots. Simply, moving species and animals out of their natural habitation and closer to the human food chain, how that will trigger epidemics and pandemics, food shortages, water shortage, you name it. It's going to create climate refugees, and it's going to have people trying to cross borders. That's going to trigger genocide. We have some real issues with climate change. When I bought the Weather Channel a little, 3 years ago, I asked my scientists to come into a room and talk to me. And I asked them, I said, by a show of hands, please raise your hands if climate change, global warming, if it's a real threat to human beings, if this is the greatest threat that we have right now, and this is a serious matter, tell me. And everybody raised their hands and said, without exception, climate change and global warming is the greatest threat that we're facing as human beings. And I said, from this moment on, we're not going to be Switzerland. We're going to talk about it, and we're going to start pattern. And we're going to do the Weather Channel in Espanol, because I want to make sure people who don't speak English in this country have access to this life-saving information.
It is a serious matter indeed, Byron. Always good to have you here on the show. Byron Allen, Allen Media Group founder, chair, CEO. We'll be watching those new platforms. Thank you. Coming up, Intel shares diving. I'll be speaking with Pat Gelsinger, the CEO, next. Intel's latest results stoking major concern. The legacy chip maker is losing market share to competitors. Revenue from the data center business dropping, also a steep decline in gross profit margin. I spoke with Intel CEO Pat Gelsinger earlier, asking for his response to the skepticism. Take a listen.
Right now, I just say, a little bit disappointed to see the markets down on us. Usually when you beat by $1 billion and raise the year by $500 million, I'd expect a little bit better response from the markets on that. So disappointed to see that. But we also understand some of the concerns around data center and where we are. We had a blowout last year in data center in the first part, so it was a tough compare. And we were a bit ahead of where we thought we'd be on data center. We just rolled out some major new products in that area. Also, as we're starting to move into our 10 nanometer and our 7 nanometer, exciting because it means we're getting more competitive and back on our front foot with our manufacturing capability. But it does bring some cost into the business as we bring up those new technologies as well. So our story is a very different one. We are leaning in, we're executing, and we feel good about our future.
Now, you explained that drop in data center revenue as an inventory correction. You said it was temporary, but investors are really concerned about long-term lost market share. Is that market share gone for good? And, who fills that gap?
Well, we feel like we just launched a major new product, Emily, our Ice Lake product launch, which is over 50% performance improvement in key areas like AI, where we're over 70% performance improvement, and the ramp for that with our customers is going very well. We also pointed out that, hey, enterprises are starting to come back to life, good growth in the government sector, and cloud guys, this is a period where they were digesting or building out, and we're starting to see them lean into the business as well. So we feel like, boy, this was the bottom, and we're ramping this year, and we're seeing all the signs that that will be the case. But we are going to fight for market share. We also commented that, hey, we are going to be aggressive here. We're bringing our software, our platform, our new silicon assets into the marketplace, and we're going to be quite aggressive in holding and winning back market share in this critical business for us. Intel is back, and we're going to be very competitive going forward.
So you mentioned winning back market share. We heard Tim Cook seriously touting Apple's M1 chips in their new Macs, the iPad. I just spoke with an Amazon executive who said they want to see their new chips in not just servers, but in Kindles, in Alexa. Since you unveiled your foundry ambitions, what better indication do you have that customers like that will come back when, to be fair, they're also competing with your designs?
Yeah, and overall, what we've described with our IDM 2.0 integrated design and manufacturing strategy, that we're going to be both producing our chips, but also being a foundry for other people's chips. And the response to that has been tremendous from the industry. And I'd point to the fact that today there's so much concentration and very few suppliers, mostly in Asia, and the world needs a more balanced supply chain, both Europe and particularly the U.S. We need manufacturing here done by U.S. companies, and we're stepping into that in a big way. We announced our 2 new fabs in Arizona, $20 billion investment, and we already have over 50 customers in our pipeline who are working with us on taking advantage of these new foundry service capabilities. Great response. But I'd also say that many of the customers, and a few of those that you mentioned in your list there, they're looking and saying, oh, I can now use Intel's products and combine it with my intellectual property and come up with more optimized hybrid solutions as well to better meet their costs and needs for the future. So this is a new chance for us to engage with the largest cloud manufacturers, the largest tech companies in the world, and give them new opportunities to innovate with US-based manufacturing, innovate with Intel-based IP, and really bring their own capabilities to the market. And so far, the response is very encouraging to those new capabilities.
Now, historically, Intel had gross margins over 60%, which reflected the strength of the product, reflected the strength of the manufacturing. Do you think you can get back to that, and when?
Yeah, we do. As we said, this is an investment cycle for us as we're coming in with the new factories ramping up, also building back our process leadership. So we're putting more into the engineering. We're seeing engineering teams wanting to come back to Intel and bring us back on the front foot there. But we do expect that over time we get to industry relevant margins in our foundry business. We're going to be competitive in that area with leadership technologies. It's a good business area. As our products get back to leadership and unquestioned in every category we're participating in, leadership products produce leadership margins. So we do view this as a cycle, and we will be getting back to the margins, the leadership, and the competitiveness that the industry has grown to expect of this great iconic company, Intel.
You talked about supply constraints, and we've talked a couple times over the last couple of months about the chip shortage. Do you have any new inputs on when that will let up and how?
Yeah, it does take a while, Emily, to build new factories. And you just don't turn them on overnight. And as we'd say, we sort of had the perfect storm. Demand was starting to accelerate, and then COVID caused demand to go off the charts. And supply chains got disrupted, so supply diminished. And that gap is pretty large. And as I've said, I think it's a couple of years until we get back to a more reasonable supply demand. And we're investing, as well as others in the industry, to build out more manufacturing capabilities. But this is a couple of years until we see things get back to where they need to be. We've seen very good response from the administration and what they're looking for American competitiveness in the manufacturing area. So quite pleased with the Biden jobs plan for research, for broadband, and manufacturing and semiconductor investments. So this is going to help us go faster and bigger in the industry. But yeah, shortages will last for a while.
Intel CEO Pat Gelsinger there. You can catch the full interview at Bloomberg.com. All right, coming up, we talked about the highest paid TikTokers and their abounding sponsorship deals, but not every content creator is treated equally. We're going to talk about the diversity challenges plaguing the platform next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. As we round out the week of our TikTok series, I want to leave you with the last, but certainly not the least, of TikTok's challenges ahead. The phenomenon of white artists appropriating the work of Black creators and getting paid more for it is nothing new. And the world of social media influencers is no exception. Let's take a listen now to Black content creators talking about their experiences in this rapidly growing industry.
As a content creator, seeing all of the things that we can do for an artist or a company and receiving such little pay for our artistic creations, it was a slap in the face, really.
Going live right now. You know how much content I made and it's just somebody random just took it and they got so much more credit?
Racism isn't exclusive to a certain field. And so even when you have new fields like the influencer industry, it's gonna make its way in there too.
I've been an influencer for about a year now. I'm currently known for choreography. I created a viral dance to one of Megan Thee Stallion's song, Captain Hook. I noticed a pay gap in my industry as soon as I started.
I noticed pay gaps in the industry when I was on Vine. I didn't get any brand deals. I was one of the top creators on the app. I had 1.6 million followers. Other creators who's not a person of color, who didn't have as much activity as me or as many followers as me, but still would work with big brands.
I did this ad deal. There were a couple other influencers on the brand deal with me. I come to find out that they had made double of what I was making. And one of them had way less followers than me. And then to think about what I was originally offered, what did they offer him?
I created a dance for a record company. They paid me at bottom line $700 compared to Addison Rae. She definitely got a higher pay of what they offered me to even create the dance.
What's crazy, we start all the trends.
And then another influencer, a white influencer hops on it, and all of a sudden it blows up, and they credit this white girl for something that a black girl created.
If a bigger white account reposts your dance without tagging you, 9 times out of 10, that artist is gonna automatically see their post. And without your name anywhere on the video or in the comments, nobody knows that you created it.
People take advantage of like black creatives. It's like this trend and it's all fun, and then someone profits off of it, off of something that a black creator started.
The way that I've had to change my content actually varies in a lot of different ways. Certain things I can't wear, certain things that I can't really speak on because I know that it will be shadow banned. And all around, just having to push 10 times harder. Full hair, full makeup, fully dressed, and just 100% glam to be able to get to that point of viral.
Creatively, I can think of a really great idea, but in the back of my head, it's like, can I even post this? Because I use the N-word or something, and the brand wouldn't look my way because I made them feel uncomfortable when I'm speaking to my audience, and my audience understand the way I communicate with them.
Can't use a lot of profanity and stuff, but then I always see like other influencers, white influencers, and it's like, oh, that's raunchy comedy. But then when I use it, it's looked at in a different light. I would be like this squeaky clean influencer, like fake optimism all the time. I didn't want to make anybody uncomfortable and potentially lose out on a brand deal.
It's a problem, like us just being ourselves when the companies be out of touch with the black community.
Black Lives Matter 2020 really showed the true colors of different companies and in the industry in general.
I don't find it surprising that black talent managers are getting more calls for their black creators.
I did get more brand deals as everything was going on.
Because everybody was stuck in the house and everybody's on social media, I feel like it was more prominent for them to make it seem like they did care about Black lives, when in general, before the pandemic, no one really batted an eye at it.
I appreciate the brands working with the black creators and starting to go in that direction, but was it a trend that they wanted to work with more black creators because they felt guilty?
I just hope that it continues.
It definitely makes it seem as if black people can be used at the power of someone else's financial gain.
What I hope to see change in the industry is the black creatives get the credit that we deserve.
I hope to see genuine appreciation for black creators, not just when it's convenient.
Let's talk about this more. I want to bring in Landon Moss, who you just saw in that story, and Karen Spencer, Chief Marketing Officer for Whaler, an influencer management and social media advertising company. Landon, thank you so much for sharing what you did in that story. I want to take a step back a little bit and talk about how you started to grow your following on TikTok. You've got more than 600,000 followers there. You know, when did you realize that there could be the potential to not just put out short form video, but make money on them too?
Right. So actually, I started on Vine back in like 2013, which was like the godfather of this whole social media influencer era. Like at the time, there wasn't even a thing. When I was on Vine, there wasn't even a term for it. It was kind of like just a bunch of random kids in their basements just making videos and stuff. And nobody thought of it as a potential way to make money. It wasn't until later down the road where, you know, someone was like, hey, I'll offer you to promote my brand or something like that. And then, you know, the wheels started to turn and you realize like, oh, this could be something where I could really make a living off of it.
Karen, you actually worked at Vine, which of course later got bought by Twitter, and you realized, because you could see, you know, not just what one person was experiencing, but what a lot of creators were experiencing, you realized that there was an inequality issue. Tell us what you noticed.
Yes, exactly. I explained the Friends cast strategy to Vine creators and walked them through how the cast had negotiated for that $1 million an episode paycheck together, because you're stronger with numbers. And so I put a number of Vine creators in a DM group and said, you all should drop the offers that you receive from brands here, and maybe you can all negotiate and reach higher prices together. And what I should have seen coming, but honestly did not, was, an average day in that group would be a white male creator coming in and saying, I've got an offer from a beer company for $10,000 for a post. And then a white female creator would say, oh, that's odd. I just got the same offer, but for $5,000, and we have the same amount of followers. And then a Black male creator would say, I just got the same offer for $1,000. And what was really tragic to see is that there were very few Black female creators in the ecosystem at all. And my hypothesis about that is because a Black woman will try and create the opportunity for herself to be an influencer, but is hit with the double whammy of both racist and misogynistic comments in her internet posts. And I think a lot of Black women are literally bullied off of the platforms altogether.
Wow. Landon, talk to us about your experience with some of these differences, your brand deals and sponsorships, the differences in the opportunities that you're seeing. And I know sometimes it can be hard to see these differences because you don't know what other people are being offered. But to your knowledge, what are you experiencing that might not be fair?
The one that I remember is I was on this campaign for this game, and I remember they had offered me, I can't remember the exact number, but it was like 2,000 or something. And so I'm like, oh yeah, like that's good money just to post a video. And then my manager, who was also like one of my best friends, he was like, let's just throw out a number. And so we said 10,000. They were like, oh yeah, that's fine. And I remember that was the first time where I was like, wait, there was no pushback. It was like almost like, oh, we knew we had that much. And then I later found out that the other influencers that were on the campaign had made double what I was making. And one of them had less followers than me and less engagement than me as well. So it was kind of weird to me that there had been that difference in, that difference in pay.
Karen, this is certainly not a problem that's unique to TikTok. And, we're talking about hundreds of years of problems here. But what can be done? What are you doing in your industry where you're working with a bunch of different folks, working across a bunch of different platforms to make change? Like, Landon, what kind of choices does a guy like Landon have here?
You're so right that it's not a new problem. The influencer industry is rapidly growing in power and profit. And unfortunately, we're following in the same footsteps that have been set up in so many other industries. But what we're facing in this industry is not just the societal systemic racism, but algorithmic racism. And so Black creators and other creators from traditionally marginalized groups are facing a number of hurdles in order to be seen by brands, to be discovered and hired by brands. And as Landon mentioned, sometimes when you're having a good day, you're a Black creator and you've been reached out to by a brand to be hired, it feels like a great day for you because you've been offered $10,000. But what you're not aware of, because you don't have a full transparency over the industry, is that a standard market rate for whatever that brand may be asking you to do is actually $30,000. But if you haven't been given the opportunity to become a part of the pipeline that is the influencer industry as it's being set up, with connections to proper representatives and connecting to brands who understand that they need to pay equitably, then at the end of the day, you've made $10,000, and that may feel like a great day for you. But what you're not seeing, like Landon said, is that other creators on the same campaign are making $10,000, $20,000, $30,000 more than you are. So what we're doing,
Landon, Go ahead, Karen.
Sorry, I was just going to say, you had asked what we're doing on our end to stop this. And one thing that we've done is produce the first house for influencers in Los Angeles for Black creators specifically. So as you've seen the growth of TikTok into being the world's most popular app in 2020, we also saw an emergence of collaborative houses for creators where they all live and work together and make content together and benefit from cross-leveraging each other's audiences and benefit from group brand deals. What we at Whaler saw was that this type of opportunity was not being provided to Black creators. So We cast 5 Black creators from across the country and moved them into a house in Los Angeles. It's called The Crib Around the Corner. They are on TikTok. That is their name that they chose for the house. And in just 3 months, they've gotten millions of views.
So, Landon, I'm curious, one of the things you said in the story earlier really struck me, where you said that you don't necessarily always feel like you can be yourself, or that you have to put on this happy face. And I'm curious, what are you doing about this? And do you feel like you have to be someone different than who you really are? Or are you rejecting that notion altogether?
Well, I think that stems from, I've been doing that, and I think a lot of Black people do. That's called code switching, where there's a certain you that you can present in public to make sure that you don't make anybody uncomfortable. And it's not just in the workplace. It's also on social media and stuff, because like what's considered marketable is a certain view, especially as a Black person. And so for the longest, for me, from like 2013 until about 2020, like mid-pandemic was when I was doing that. I mean, I would look at myself and I'm like, I don't even recognize who this person is. Like, I'm trying to be all squeaky clean all the time, which, I mean, it's part of me, but it's not all of me. And so I began to get like more comfortable expressing who I really was and showing all sides of me. And I realized, like, people are a lot more attracted to authenticity, maybe not brands, but your audience. So that's, that to me, that was the most important thing. But I know there's going to be some type of loss from it.
That is so eloquent, the way you said that. It's part of me, but not all of me. I really appreciate you sharing your story with us. TikTok content creator Landon Moss, Karen Spencer of Whaler. So fascinating to hear what you're working on and how you're working to change the industry. Really appreciate you both taking the time to join us. All right. Coming up, President Biden wrapping his 2-day climate summit, where he urged world leaders more needs to be done. We're going to look at the big takeaways tech companies are making next. This is Bloomberg. President Biden wrapping his 2-day virtual climate summit, where he pledged new emissions targets for the United States and encouraged some 40 world leaders that more needs to be done. And while the president stressed the importance for countries to do more, companies have also pledged to do their part. I am joined now by Cisco EVP, Chief of People Policy and Purpose, Fran Katsoudas. Fran, thank you so much for joining us. Really impressive initiatives and commitments that Cisco is making here. Can you talk to us a little bit about just what Cisco is doing and how you're putting your money where your mouth is?
Yeah, happy to. So we are committing $100 million to address the climate crisis. And if you can believe this, Emily, today only 2% of philanthropic dollars go to the climate crisis. And so we'll be working hard to put our money towards the technology and the innovative projects that can drive impact. There are so many companies doing great work, a lot of startups, and what they need is investment and support to really get to scale, and that's where we're going to focus.
Do you think more tech companies need to step up? I mean, I don't think people realize that all of this data storage and servers actually consume a lot of energy. We don't see it, but it's happening.
Yeah, at Cisco, what we talk about is this strategic urgency. And what that means is that we have to take action today. And I think so many tech companies are, Emily, which is great. But then we also have to make strategic moves for the future. And I think we know this, but there isn't a single country nor a single company that can drive impact. And what that means is we're going to have to come together in different ways.
You are also in charge of getting a massive workforce back to work and helping them transition physically and emotionally back into the office. What are you seeing in terms of the willingness and the resistance to do that among your employees, and how are you managing that?
It's interesting that you said emotionally. So here's what I would say. We know that employees want to work in different ways. And so we've had the extremes now across the industry. We've had everyone in the office, we've had everyone at home. At Cisco, we've always had a bit of a hybrid model, and we're going to lean into that more and more. I think choice is going to be incredibly important for our people. I do think that over the last year, we see higher levels of burnout. And so I think we're going to have to be thoughtful about what brings out the best in our people and how they play to their strengths. What we have seen at Cisco is the majority of our roles can be done remotely, and that our employees want to work in the office, in some cases 2 or 3 days a week moving forward.
So are you expecting everyone to come back full time? Are you expecting hybrid mode forever?
So it's interesting. We right now believe that it will be hybrid mode forever. And that is based off of both talking to our employees, but also looking at what's going on more broadly in the industry. And what we've recognized is that there's different types of work and different ways to get that work done. So what we're going to lean into is really what drives that innovation, that connection, that engagement. And that'll be different for our employees around the globe.
All right. Fran Katsuda, Cisco EVP, Chief of People, Policy, and Purpose. The purpose in that title, very important. Thanks so much, Francine, for joining us. All right, still ahead, privacy and profitability. We're going to take a look at the consequences of China's big tech antitrust crackdown next. And as we head to break, a look at Johnson & Johnson after hours after the CDC late today reaffirmed the backing of the J&J vaccine authorization. Big one there. This is Bloomberg. As the Chinese government targets its big tech giants, one big question is whether proprietary data from the likes of Alibaba, Tencent, and more will essentially be nationalized. As part of a new Bloomberg television special, Red Lines, China and Big Tech, our chief North Asia correspondent Stephen Engel looks at how a national pooling of data could have significant ramifications on user privacy and affect tech profitability.
From the government standpoint, I mean, it's not in their interest to see the tech companies to become smaller and weaker.
So what leverage does Jack Ma and Pony Ma have?
The leverage lies in the cash rich. They have strong talent pool. They're already very sophisticated in software development.
They have the data.
Yeah.
Which the government probably wants as well.
I wouldn't disagree with that.
A year and a half ago, China released a document codifying data as one of the core socialist factors of production, under the idea that you must have a well-regulated data market in order to maintain economic growth. This is the fundamental core operating principle that China will be using to regulate big tech over the next 10 years, and it's something that really hasn't yet entered into the Western lexicon.
The Chinese government is said to be mulling a state-backed joint venture with the large platforms to oversee how their combined data is managed and shared.
Anti-monopoly alone wouldn't solve the problem. Rather, there should be an agency in China which serves as a champion for the internet sector. In other words, not try to crack down the problems, try to develop the sector.
But pooling data raises a host of privacy issues. Tencent's Pony Ma in a March analyst call conceded that data is extremely complicated. There's a fine line, he says, between ensuring users' privacy and opening up data to sharing. Others, like Baidu, claim to be open to opening their data vaults.
It's very much in line with our belief. We run a lot of open platforms for autonomous driving. It's Apollo, right? For AI in general, we have Baidu Brain, which is also open. We like openness. We want to share data with other partners.
Giving up one's data surely could upend existing market-leading positions, but non-compliance is perhaps the bigger risk. For Alibaba, getting off with a fine doesn't mean it's in the clear, and that alone surely won't pave the way for an ant-IPO resurrection.
It depends on how the government restructure our regulatory framework in terms of financial technology, and also depends on how the company reacts to the changing regulatory environment.
Which begs the question, how far will the government go in taking on Alibaba and Tencent and all the others?
Of course, they need the golden eggs laid by these geese, right? They need the innovation, the growth, and they know that if they try and do this all from a state company, it's not going to work.
Duncan Clark there, longtime China watcher. Watch more from Stephen Engel as he explores how far China will go in reining in its national tech champions. That is Red Lines, China and Big Tech tonight, 8 p.m. Eastern, Saturday morning in London and Hong Kong. Very important coverage there. And that does it for this edition of Bloomberg Technology. Next week, Big Tech reports. We're going to be covering Tesla, Alphabet, AMD, Facebook, Apple, Twitter, Amazon, all out with results. We'll have conversations with execs, analysts, and much, much more. That's all next week right here on Bloomberg Technology. I'm Emily Chang. Thanks for watching. This is Bloomberg.